Hello there, John Napolitano here this morning with you. Happy earnings season to one and all. I hope everybody's doing great. I am here at Top Trading Pros. I am the options instructor. My sole job is to educate those in the financial space who are interested in options trading. So at toptradingpros.com, we do things a little bit differently. We are a community of like-minded traders who share ideas with one another and who have coaching on a weekly basis from professionals like myself. I've been an institutional trader for over 20 years, and I bring that experience with me in the options space. So I wanted to create this video just to say hello to some of you who have never met me before and to introduce myself, but to also talk a little bit about earnings season and some of the things that we can look at from a trading perspective, especially for options. So when people trade earnings, oftentimes what they'll do, and I've seen this on YouTube a million times, is they just talk about buying straight calls or straight puts when they're either bullish or bearish. You have to realize that the options market and the stock market as well, when you're trading earnings, you really have a double coin flip. People always, you don't know what the outcome is going to be when the earnings actually come out. The other thing you don't know is what the reaction to the market is going to be. So really, if you think about it, normally when you have a coin flip, you have a 50-50 chance. When you have a earning situation, you have the coin flip, which is 50-50 of it being a favorable event or a non-favorable event. But then you have an reaction after that. So sometimes earnings can be favorable and you could have an unfavorable market reaction. That could be for many different reasons. Maybe the whole market is weak that day, or perhaps for whatever reason the stock was overpriced or maybe overbought at that point, and people use that. And when I mean people, I mean large banks and institutions use that as a selling opportunity. That could easily happen. The next thing that could happen is the stock has unfavorable results, and that's what you anticipated. But then what happens is the stock rips. That could happen too. And people scratch their head and wonder why. It could be for a multitude of reasons, but oftentimes it could be short covering. Sometimes when people are short going into a position and the news is over, once the event or the catalyst ends, there's no reason to be short anymore. So you get a massive inflow of buy orders that come in on bad news. So that's the kind of stuff you have to deal with. So really, if you multiply 0.5, which is 50%, times 0.5, which is another 50%, you really got a 25% chance of really your trade working in a situation like that. So it always kind of makes me laugh when I see these gurus on YouTube talk about, oh, let's go long and buy calls and be aggressive. That's great, but it's a low probability trade. So just go into that knowing that that's the case. So I have a couple of solutions for you, which I'm going to jump into right now. We talk about all these types of trades in our classes. I have this incredible boot camp coming up on Monday, May 8th. It lasts for 2 weeks. You'll have access to all my material as well as 4 coaching calls from me. And that is a great value. If you want to check it out, go to toptradingpros.com. Also, please, if you like these types of videos, please subscribe to this channel. We'll continue to create content and free content for you guys to get your feet wet and to get comfortable with our process. So I shared my screen with you here. I'm just on FinViz, which is a fantastic website for those of you who are not familiar with it. We are going to go to Apple, which I have set up right here. I'm going to go to the full screen so you guys could see what I'm looking at here. And basically, as you can see, Apple is reporting earnings, by the way, on Thursday evening. So in 2 days, Apple will be reporting. If you'll notice here, we have quite a bit of an uptrend since the beginning of the year. And I'm going to go back here and look a little bit. Here is an area of resistance where previous sellers came in and took the stock down. It's a fairly psychological price as well, 175. You also have this massive cup forming, which is definitely a situation where a fairly reliable trading pattern. You get a cup and handle formation where you get this gigantic cup and then it comes down maybe to a moving average and then makes its way back up. That hasn't happened yet, but that is something to be aware of when you're putting together trading strategies. The next thing here is you have an area of support around that 164, 165 level. So really what I anticipate and really what the options market is anticipating, we talk about this in our classes too, is where do we think Apple is going to go into earnings? Now, we don't know whether it's going to go up or down, but based on the movement of the options and based on the volatility of the individual stock, it's probably going to stay within this range. That's pretty much what market makers and what the options market is telling me. Now, there's always surprises, obviously, but this is pretty much the area that I'm anticipating Apple to land in, somewhere between 165 and 175. Current price right now, by the way, is 169.59. So that's kind of the range I'm anticipating the news of Apple, whether it be positive or negative, to happen. Now, what's great about options is you can put together a trading strategy for that. You don't have to necessarily pick a direction. With options, what's really cool is you can do certain strategies that are sideways in nature. And basically what I have here set up is what they call an iron condor. An iron condor is a little bit more of a complex strategy, but you will learn it if you spend some time with me in my boot camp and my classes, where you're basically putting together 4 different option trades at once in one specific strategy. The 4 different strategies are here. What you're essentially doing is you want to make sure that Apple stays within this profit area. That's what this blue line represents. As long as Apple stays within this area, which represents 175 on the far side and 165 on the short side here, you will be profitable. Now, one of the things you can also measure is the probability of this trade, which is pretty cool too. There are things called option Greeks, which some of you are familiar with. So you can put together trades that are low risk, high probability, which is essentially what this trade is. It's a low risk. It's actually a fairly low reward. You're kind of capping by having 4 different strategies here, four option contracts. What you're essentially doing is you are capping your gains. So that's okay because you don't want to be short options and run yourself. You don't want to be in a situation where you have massive risk. So you don't want that to happen. So this 4-leg option strategy caps off your risk. It allows you to do all that stuff, and it allows you to have a decent profit with a decent amount of risk, and it allows you to sit through earnings and not really care about what direction the stock goes in. So that's pretty cool. So either way, that is something that I teach in classes. This is called an iron condor. Basically, the idea of this is that you would want the entire trade to expire worthless and collect a nice paycheck at the end of the session. And that is exactly what I anticipate to happen. Obviously, things can change. That's why we have to find risk. We talk about risk management in our classes as well. We talk about position management, the ideal optimal size for every trade, and so on and so forth. So there's a lot of things to learn, but option trading is not this mystery that everybody thinks it is. It's not difficult. It just takes a little bit of time and practice. Like anything that's worth anything in life, it takes time and practice. So if options trading was always something you were curious about, if it's something you're interested in learning, please spend some time with us, toptradingpros.com. Please like and subscribe to this channel, and we will continue putting out videos to educate people on option strategies and options trading, as well as risk management and how to handle trading on a psychological level as well, which is very important. That's why the coaching calls are so important. So again, my boot camp is this Monday. Check it out on our website. And feel free to ask questions and reach out to our support staff if there is any interest. I hope you guys have a fantastic day. These are all strategies that you'll learn into earnings. They are very effective, and hopefully you guys will implement them. So great. Have a fantastic rest of your week, and happy trading, everybody. Take care.